welcome back. You're watching Stock Watch with me, Zinati Kuma, and joining me to unpack your stock-related questions tonight are David Shapiro from Sasfin Securities and Mark Du Toit from Oyster Investments. Be sure to send your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Thank you so much for your time, gents. Although I'm not sure how many viewers we have today because everybody is trying to figure out what is happening with the elections. And actually, starting off with you, Mark, the day was so downbeat today. We haven't seen sharp losses like this on the JSE in a while. Is it a mixture of things, or is it solely the elections?
No, I'd say it's a mixture. So, I mean, this month we've seen the JSE up largely on better commodity prices and a weaker dollar. And in the last few days, we've seen a reversal of that. So dollar strength and commodity prices coming off. The US markets also off on yesterday, Wednesday, and today. So, I mean, that also feeds through into our market. So I think there are a number of factors. I mean, the big standout in today's market for me was the weakness in the South African facing stocks, particularly the banks and the retailers, selling off quite a bit. I mean, and that is, in my view, a result of kind of this more surprising election results coming in so far. So a big divergence in performance between SA Inc. and non-SA Inc. today.
Yeah, I'll actually come back to SA Inc. But since Mark makes a point of, it's not just the JSE, it's also the US markets. David, I think you cover the stock Salesforce because that was also...
you shouldn't have brought that up.
Why? Because it has the Dow under so much pressure.
I know.
Yeah,
I know.
You covered, right? I think you've made it a stock pick, if I'm not mistaken. Why is it down so bad today?
It's one of those businesses that before AI came along, really helped companies transition onto the cloud. They brought all sectors of their businesses together. Software company, one of the Dow 30. And what came through, and I've got to look at this very carefully because I've liked the company very much. But what it does expose, which is quite interesting, is that, look, if you haven't got your AI strategy properly sorted out, this is what's going to happen. And one of the reasons that the market responded is that they weren't happy about where Salesforce is in their AI offering, if I could put it that way. I've got to do a lot more work on it. And just said, okay, we don't like you. We're just going to mark you down 20%. So when you see one of your stocks fall 20% overnight, you're entitled to feel grumpy, which is exactly how I feel at the moment. But it's
well, you know how to mask it.
One has to look at this. I don't like knee-jerk reactions, and therefore you've got to see whether they can recover and they can respond and can keep their clients satisfied. But what it does do, AI, is opens its way for newcomers who can start from scratch. So anyway, when I saw that, when I saw the 20%, I thought, oh no, it's been such a great day. Oh, anyway.
Well, David, someone was actually happy earlier. I did have Caroline Kremen on, and she actually chose Salesforce as her stock pick. Mark, I don't know if this is one that you look at, and I'm wondering, because, she said that it's a good company. David mentions, the kind of markets weren't really happy about, the AI strategy, where they are on that front. But, would this maybe be an opportunity for someone who's not in the stock to actually go into a quality company? Okay, David says yes. Mark?
I don't look at Salesforce in detail, so I wouldn't be able to give you a good idea there, unfortunately.
This is not a great day for me today because just to run ahead, I was looking at Dell as well, which is my stock pick, and I see they're down 5%. So I'm just going to ask Mark to take over for the rest of the program.
Yeah, I like this. All right. Well, just going back to Mark, you mentioned the retailers, and actually they were down very, very bad. TFG was actually leading those losses. Woolies second, and Truworths as well. Woolworths did come out with a trading update. Did that make things worse for the retailers?
Yeah, yes, it did. I mean, they did mention in their updates that apparel sales were weaker than what they expected in both South Africa and in Australia. So that is a negative read-through for the other retailers on the JSE. So that did add to the underperformance. But and then on top of that, we have this kind of uncertain election result and how how a coalition is going to be formed, which is going to hang over SA Inc. for the next 2 weeks until we get more certainty.
Well, David, something interesting also that Caroline said was that, I mean, just the reasons that they're giving for this underperformance, Woolies that is it seems like it's the same story. It's been that story for a while. And what's interesting is that David Jones was the issue. Now David Jones is out of it, but now it seems like it's exposed all the other issues that they were maybe being overlooked. Is that the feeling that you're getting?
You mentioned that, they've said all of this before. I know Country Road, I just came back from Australia, and I know that consumer consumption there is under pressure. Consumer buying is slowing down, and likewise here, the food's doing okay. So I think the market was just taken aback that they haven't got on top of this, and that things are slowing down here. And I think hence the markdown. I think we were expecting more from Woolworths, particularly that they re-looking at their merchandising, at their apparel side of the market. The food we know is doing well.
Yeah.
But I think it just acted as a bit of a shock. But it also came, in all fairness, it came with a massive sell-off of our banks and of SA Inc., of our banks and our retailers as well. So you have to put the two together.
Well, talking about banks, because this has been a sector that all of you love, but considering now the possibility that markets are kind of pricing in of the ANC getting less than what they thought they would get, and now the possibility that they could, form a coalition with the EFF or MK, Mark, of course, they've been marked down today, but if that happens, because usually with these, sell-offs, markets would see this as a buying opportunity. But if we actually do get to that kind of scenario, how under pressure would banks be, Mark?
Yeah, I mean, it's a very difficult question, and I mean that's what the market is trying to price at this point. It all depends on what trade-offs are made. So in order to form a coalition, one party is going to have to trade something to get the other party to join. So it all depends on what the ANC has to trade in order to get a coalition. I mean, I think that our base case is still that cool heads will prevail in the end, and I think we could well have a good outcome from this. And I think the fact that we've had a very peaceful and we've seen the democratic process work like it should, I think that's very positive. So it's just in the next 2 weeks the volatility is going to be a bit difficult. I mean, we hopefully are going to make a little bit extra money out of the volatility in the next 2 weeks. But yeah, the markets need to know kind of the road ahead in order to price our banking stocks appropriately.
David,
I think the market's scared that Floyd's going to be the next Minister of Finance, So I think who knows what a coalition's going to demand, because I don't think Floyd's going to be Minister of Agriculture or anything like that, I think or Julius, I think they want something a little more colourful that's going to bring them a lot more recognition, a lot more power. So I think I think that's the worry in the market, is what will the very good policies of our Treasury and the very good policies of a Reserve Bank be tampered with? Will the populists start to tamper with it? And I mean, if you listen to the governor today, he's as cool as anything, just carrying on. Nothing disturbs him. He looks at inflation and talks about the economy and makes appropriate decisions. And that's what you need. And I think the market's just worried that that's going to be someone's going to come and unsettle that very good, the stability that we have there.
Yeah, I mean, talking about cool heads, he gets the job done. So with financials, David, sticking with you, and the banks, because obviously they're so cheap, they're really good companies. Would you be seeing this as an opportunity to nibble at the banks? Or would you just run the other way?
I think just wait. Let's see what the result brings. You know, to be honest, without just talking as a business person, I think probably the markets would respond to a DA-ANC coalition, simply because the DA have done very well, and there's proof down in the Western Cape. And I think that's what the country wants, or that's what outsiders want to see. Okay, let's go center of the road, you know, middle of the road, a centrist party, and do good for South Africa and start to build up where we should be, rather than kind of invoke the policies that the EFF want, you know, nationalize everything, or even the NK, who just want to seek revenge. So I think that's what's disturbing markets, and correctly so. You know, if you read the manifestos, yeah, you've got room to be worried. So let's see what happens. So, but hopefully there is common sense does prevail.
I was actually quite surprised that in the MK tents there by the voting stations, Zuma's face was actually still on there, even though he can't go into parliament for the next 5 years. It was quite interesting. Anyway, let's go into, before we go to break, there's a question here on Zeda. It was one of the companies that released results today. Please, can you share your views on Zeda's results that were released today? The stock is on a P of 3.1 below. Well, yeah, they obviously have sent some numbers, which we know. Mark, your take on Zeda. Not really much share price movement today, although we did see top line growth, but that not trickling down to the bottom line.
Yeah, I think the car rental companies are in a good space at the moment. I mean, during COVID, we saw the fleets being sold off, and now post-COVID, travel's come back. There's a shortage of vehicles. They're able to price upwards, so they're enjoying a nice kind of macro tailwind at this point. And I think that's why Zeda is trading on such a low multiple, because the market's saying, you know, in 5 years' time, competition's going to erode some of the profits that or some of the margin that they're currently enjoying. I mean, the results were good. I think the one thing with the interest costs were a bit higher, which impacted their bottom line. But yeah, it is cheap. It's a cheap, small South African focused business. So we do need a decent macro view to invest in the smaller SA facing stocks, which in general are very cheap. And if we can get some kind of economic growth going at a 2% level, the stocks will do very well. But you know, we're in this period now where we are uncertain as to what the policies are going to be. And I mean, it's kind of, I think we're just in a bit of a pause mode, because we're seeing the benefit of the effort that's been put into Eskom. I know there's a lot of noise about load shedding, because it's gone because of the elections, but the availability factor's a lot higher. A lot of solar has been added to the grid, so that shouldn't be a drag on growth anymore. And we've seen quite a bit of movement in the logistics space. I mean, the ANC have done a fair amount of work to address supply side constraints. So that's on a relative basis should get better. So there are some tailwinds which can help us as a country grow again. We just need a bit of policy certainty now, hopefully in the next 2 weeks.
All right. And of course, Sam.
Yeah, I'm always a bit suspicious of those companies like that are not wanted by the holding company. You know, Bala said, yeah, we don't want Zeda, let's list it. You know, the same as Transaction Capital. We don't want We Buy Cars, let's just list it. You say, well, why don't they want it, you know? But it is, it's a business that's been on and off. But, it is, as Mark said, it's in a very good space at the moment with tourism picking up. And they should do well. It's not the kind of company I run after, or I use their cars, I hire their cars, but I'm not one that's really enamored by the operations. Yeah.
Well, Mark, I was speaking to the CEO of Zeda earlier on, and I know that when they listed, there was some concern from some market participants on their debt. I I did ask her about the debt, and she's like, well, they're not really on a debt reduction drive at the moment because they do need, that funding to actually make money, grow the business and stuff like that. Is that not a concern at all in terms of where their debt is?
No, I wouldn't say that that's the main concern at the moment. I think the real issue is that they are just a smaller company in South Africa, and the whole mid-cap and small-cap space is trading on very low multiples at this point. I mean, typically what we see is the larger cap stocks run first. So, you will see their multiples increase if people get excited about South Africa, and then the smaller and mid-cap stocks tend to catch up later. So I just think we're in this space now where the large caps are looking very cheap. And so we need them to first kind of pick up the slack before people look elsewhere at the smaller stocks.
All right. We're talking about being excited at South Africa. BHP not quite excited about Anglo-American South African assets. There's a question here with the Anglo BHP. So this is for Amplats. With the Anglo BHP deal off the table, for now at least, I expected a bounce in Amplats. However, that did not materialize. With so much uncertainty and moving parts in this, should I continue to hold? Optically really cheap with the best PGM open cast mine, but could corporate action ruin this stock? So the viewers holding it, should they continue? Actually, why hasn't there been a bounce, David?
Well, if Anglos are going to continue, they're going to have to offload it. That means they're going to unbundle. They own 70-odd% of the company, which is going to go to their shareholders. That means you're going to get a huge amount of shares coming onto the market. And it's not the best of time. The platinum price is stubbornly around $1,000 an ounce. There's not much demand at the moment. Things are not looking good. They're faced with all the issues that are that are plaguing South Africa. And that's why it's become such the subject of discussion. That's why Billiton didn't want it. And Anglos is going to get rid of it. So, I mean, it's an unwanted child. And at one stage, it was a massive supporter of Anglos. Anglos survived on Amplats paying up dividends. It always got good dividends because Anglos would use those dividends to do all the other corporate actions that it needed. At the moment now, it's a bit of a drag. So I think there are a lot of things against it at present, and that's why it's performing the way that it is.
Yeah.
Platinum price. So outside issues as well as these internal issues as well.
At the end of the day, it's still going to be unbundled, whether it's part of the deal by BHP or Anglo's own turnaround. But Mark, how then is Anglo going to be more responsible in terms of unbundling it than BHP? Is there,
Yeah, I mean, it's a good question. I think that I think that the BHP offer probably was a little bit cheeky. I mean, they didn't want to particularly pay up for Anglos. I mean, if they'd come in with a better bid, in fact, they didn't make a formal offer in the end. They might have got a bit further along. I think they were quite stubborn in that they wanted Kumba and Amplats to be spun out before the share swap took place. So that was just a bit of more complexity to the deal that the Anglo shareholders didn't want. But Anglos in response came out with their own stated plan, which includes unbundling Amplats, but keeping Kumba. So that all now needs to play out. I think they'll probably take longer to unbundle it, is my view. And then there will be a lot of a shareholder kind of, a lot of people will sell the shares that they get because perhaps they don't want the PGM exposure, or it doesn't fit in the index that they manage to, so there'll be a lot of churn in the share register, and that's going to be a bit of a drag on the share price as well. So maybe people just taking the view that they'd rather sit on the sidelines and just wait to see, do the PGM prices recover and what the shareholder register looks like and which indexes it's included in before they get involved again.
David, is it wise for somebody to hold knowing what is going to happen with this unbundling, or does it maybe just depend on your investment thesis, particularly your view on PGMs in the long term?
We have a lot of risk takers in our markets. This is a traditional mining market where people are, hang on for a long time and have got great faith. Personally, probably there are better prospects elsewhere. This is going to take a long time. The reason they're holding on to in fact, BHP said it's better to unbundle it because Amplats will be on its own. It doesn't have to feed its Anglos anymore. If it doesn't want to pay a dividend, it doesn't have to. At the moment, the reason they hold on to Kumba is because it's a bit of a cash cow for Anglo. So I'm very nervous of the platinum producers. We've been looking for the bottom, and it's been there. But I think the recent events now, I'm talking about the Anglo deal, just kind of okay. I don't need to take these kind of risks. I can wait. There's plenty of upside if things do turn around.
Mark, do you think BHP could wait because now they can't make a move for 6? David says no.
Yeah, so
Mark?
for 6 months they can't make an offer now. So I think if anything's going to happen, perhaps Glencore comes with something in a few months' time. But otherwise Anglos just has to execute on the plan that is put forth to the market. And everybody's very excited about copper prices. So let's see if that actually comes to fruition, which would be very good for Anglos. And the other big the big point that Anglos needs to do is find a JV partner for their polyhalite business in the UK. So I think if they are able to do that, I think that'll be quite positive for the Anglos share price as well.
David, do you think that Anglo could be more attractive as a takeover target after this turnaround of their own is done? You're shaking your head.
No,
well, they said it wouldn't take 18 months.
This is it's one thing to put up the PowerPoint presentation. That's easy. We can do it. Especially with AI, you can do very pretty pictures. But the problem is execution risk. And this is a notoriously difficult industry, mining. You have no idea what's going to happen tomorrow. Even as we talk about higher copper prices, they're coming down fast. We've all been talking about these wonderful copper prices, and every day I look and I see it going south. So mining's difficult. It's incredibly difficult. So you can't. I think actually making the plan work is going to be, if he gets it right, I think it's going to be more luck and hard work than anything else. So just understand mining.
Yeah. All right.
Mark's old man has been around a long time. He knows these things very well.
We should have had him on the show. We should have had him on the show. Well, Mark, we have you, and we would like your stock pick for today. What will that be?
Yeah, so today I'm being brave when others are being fearful. I'm buying the Foschini Group. Share price was down almost 7% today. We liked the business before the sell-off, and so today we could buy it at a better price. Foschini's group does have exposure to the South African apparel market and Australia, so I think Woolworths' comments were part of the reason for the sell-off. But we think longer term the business is well positioned, well run, well managed. We think this set of earnings is probably going to be weak, but they can grow off this base. Going forward, they won't have load shedding in their numbers, which was quite a drag last year, and we're expecting earnings to grow sort of in the high or the low double digits, 11% a year. You get a 4% dividend yield, and I think in time we'll get a re-rating as well. So we like Foschini Group, and today you're getting it at a 7% discount.
Yeah. All right. Well, David, where are you looking today?
I was looking at Dell, and the reason that I look at Dell is that their equipment is very well liked by NVIDIA, but they're also starting their own AI, equipment or their own AI computers with their own chips. So this is one that I completely missed and is up like 35%. And when I decided to take it, to look at it and say, okay, I'm going to recommend it. What did it do? It fell 7%. But I see it's only down about 3.5% as well. But have a look at Dell, have a look at some of the desktop companies as well, Lenovo as well, who are well placed to benefit from the growth, particularly if they come out with a new range or a new line of AI computers. We're all going to have to buy them.
What am I doing here? What am I doing here?
Now.
Yeah, I should be making chips. Thank you so much for your time and for your analysis today, gents. Really, really appreciate it. That is all for tonight's Stock Watcher. Thanks to our guest, David Shapiro from Sasfin Securities and Mark Du Toit from Oyster Investments. Up next, The Close. Stay with us.